On one hand, if you put silver at $200-300, your mind goes to, oh shit, what's going to happen to industry? What's going to happen to all these manufacturers? But you look at gold, and if I would have said to you 3-4 years ago, when gold is $1,000, gold goes to 5,500, is there going to be blood in the streets? Most people have said, hell yeah. It's gonna be crazy, right? But it wasn't, right? At 7 or 8 or 9,000, does that mean life goes on?
I don't think it's necessarily cheap historically, but I do think $45-50 is the bottom. I think the upside over the next 10 years, and again, I have a long time horizon, is probably $300-400 an ounce. I don't view silver as a precious metal. I view it as an industrial metal. Look at what Samsung's doing now with their new solid state battery. It's super interesting. It's expected to use 20 times the amount of silver that current EV batteries use. It's expected to be commercialized in 2027. It has a 600-mile range, takes 9 minutes to charge up to 80%, has a 20-year life. If this goes mainstream, probably consume 5 to 10% of silver's annual output, annual production.
You know, there is a global monetary shift happening. I talk a lot about it. I know you're familiar with it. But when you step back and look at what's happening across the global south, you got central banks buying gold, hand over fist. It's funny because central banks, by the way, as a footnote, came out and said they bought more gold, or the reporting was that the central banks bought more gold in the first quarter of this year than ever before, ever. But the World Gold Council just came out and said, you guys are lying bastards. You actually bought 15x more than you said you bought. You didn't buy the 16 tons you said you bought 240 tons. There's no question that gold is being ramped up by the most well-informed traders in the world. And at the same time, I've talked a lot about, and probably with you, the new payment systems that are emerging, the cross-interbank payment system, SIPs, the M-Bridge. These are both operational. And you have, without prejudice, more trade happening outside the dollar than ever before. I guess my question to you is, are these isolated stories, or are they all chapters of the same book? In other words, you know, are these one-offs, or are we seeing a new shift to perhaps a new monetary system to not replace the dollar, but to run alongside it?
Yeah, I think run alongside it. If you look at, you know, the peak of the Bretton Woods system, there was 38,000 tons of gold held by central banks.
Central banks keep praising confidence in the dollar while quietly accumulating gold at historic levels behind the scenes. Andy Schectman notes reported purchases may capture only a fraction of actual sovereign demand, exposing a widening credibility gap. If payment systems outside the dollar keep expanding alongside hidden bullion buying, portfolio assumptions built on yesterday's monetary order become increasingly fragile. Next, Andy Schectman exposes why official gold data and institutional behavior cannot both be true.
So today we have about 37,000 tons of gold held by central banks. So you could argue that we have a gold standard right now, sort of a low-profile gold standard in parts of the world. I think this is to run alongside it, but I don't think America's just going to stand by and watch it happen. So there's a whole bunch of directions that we can go. I kind of like, I think when the last time you and I spoke, we had a little bit of back and forth about this, but China is setting up their system and hoping to bring people along with them by having some sort of alternative currency. I don't know if it's going to be gold backed. It sure seems like that's what they want. But if you look back into the 1990s, a lot of the Pan-Asian countries, because of a strong dollar and the crisis that they were going through, wanted to create their own currency, something like the euro, right? And they needed it desperately, but they couldn't come to agreement on how to go about doing it. And it was supposed to be sort of a gold standard currency. They couldn't come to an agreement when they desperately needed it. So I question whether, you know, a lot of people talk about the BRICS creating their own currency. I don't think that's going to happen. I don't think they're going to be able to come to an agreement on how it's going to work. But having said that, you know, I do believe there is sort of a gold standard already, given how much central banks are holding as reserve assets.
The real shift may not be replacing the dollar, but quietly reducing dependence on it one trade at a time. According to Andy Schectman, central banks now hold nearly as much gold as they did during Bretton Woods, despite a completely different public narrative. That suggests policymakers are preparing for parallel settlement systems, while investors remain fixated on currency headlines. Next, Andy Schectman reveals why reserve strategy matters far more than political rhetoric.
It's the same, similar to what it was at the height of the Bretton Woods. So I don't know if that answers your question, but I'm torn on it, I guess, is where I'm going with this. And the reason I'm torn on it is because I see everything that America's doing in the background. You know, people talked about CBDCs. Oh, it's not going to happen. Well, it's just been basically postponed for another vote, you could say, until 2020 or 2030. But you still have stable coins, the Genius Act, the Clarity Act. This is a big deal. This is a big deal for U.S. dollar hegemony. So I'm rambling here. I could go on forever, but I also think Wars has his own ideas of how he can keep the dollar on top for longer. But I think it's just a parallel system, I guess, in a nutshell. And I don't know how well it's going to work.
Yeah, and I don't think China wants to be the world reserve currency because they understand that you can't have a manufacturing base if you are, Triffin's dilemma. But I think the rails are being set up, multipolar rails, for countries to use their own currency as much as possible for trade, settling imbalances in gold through all these multi-jurisdictional vaulting systems we see springing up all over the global south. The Shanghai Metals Exchange has aspirations of placing throughout the entire Belt Road Initiative. We see the new one that just opened up in Singapore, and one in Hong Kong that just opened up the other day for price setting.
Washington says monetary innovation is about efficiency. Yet every major payment proposal also strengthens strategic control over capital flows. What Andy Schectman is highlighting is that stablecoins, settlement networks, and gold-backed trade infrastructure are developing simultaneously rather than competing directly. Institutions prepare for multiple outcomes, while retail investors are encouraged to believe only one system can survive. That disconnect deserves far more attention than daily market headlines. Next, Andy Schectman exposes why the architecture being built matters more than today's political debate.
Now you're going to have a challenger to the West for the first time, where Hong Kong and much like United Arab Emirates, where it's same-day settlement, and Singapore, these exchanges are being built to challenge the Western hegemony. Maybe they don't want to be world reserve, but I think that they want to be responsible for their own monetary affairs rather than bolstering ours. It's an interesting time, to say the least, and I do agree with you. It is no question a shift to challenge the Western hegemony. And as far as gold is concerned, it doesn't need to replace the dollar. It just needs to be viewed as a alternative settlement vehicle. It is already. You've seen that happen. As collateral, it is. You see that happening already, and I think it's kind of taking shape as you know, a very important part of a new monetary system. I appreciate your perspective. So let's look at a big picture for a moment. So I don't know, I like your perspective. When historians look back on this decade, what do you think that they will say was the real turning point, the moment that started this change? COVID, yeah. Boy, that was quick. I wasn't sure what you were going to say there. I wasn't sure if you say AI, if you were going to say, the war, COVID. I would agree. That certainly did change everything, didn't it? It changed everything for me, no question about it. Why do you say that?
The biggest monetary transitions rarely begin with a new reserve currency. They begin with new settlement infrastructure. Andy Schectman's argument suggests that exchanges in Hong Kong, Singapore, and the Gulf are being positioned to process trade outside traditional Western channels long before headlines acknowledge the shift. Investors waiting for an official announcement may discover the transition was already underway for years. Next, Andy Schectman reveals the event that may have accelerated this global realignment faster than expected.
For a couple of different reasons. One, it was the biggest print in my lifetime for money. Two, society how everybody treated each other. So it was a wedge issue, obviously, how to handle it. You know, do you go get a vaccine? Do you not? Neighbors snitching on each other. I mean, in certain areas, it was worse than others, right? Lockdowns are unhealthy and so forth. And I think it just wedged society against each other. A ton of money was printed. It showed people, whether they realized it or not, that money's not that valuable if they're going to give it away for free. And yeah, that's what I think kicked off this inflationary regime. And I think the hangover, we're still dealing with the hangover of COVID, and from a monetary policy perspective and fiscal. So that's why I think it's the biggest issue. The second, if I can say there's a second, was what Biden did to Russia, cutting them off of the SWIFT, seizing assets. That turned the tide on potentially U.S. dollar hegemony and having treasuries in your reserves. So those two are the biggest, in my opinion. But COVID is number one. Like, I like to focus on macro issues that include societal, political, warfare, and commodities. And I think COVID touched everything.
Yeah, I love that. And I do too. I mean, I do too. I think the macro perspective is very important right now. The micro kind of gets you lost in the minutia. I think this is a big picture. You touched on the Genius Act. I talk about that all the time.
Inflation didn't begin when prices surged. It began when confidence in fiscal discipline quietly disappeared. This is where Andy Schectman's thesis shifts from economics toward trust, arguing that extraordinary money creation and reserve asset seizures permanently changed how governments evaluate financial risk. Savers often focus on interest rates, while institutions focus on preserving purchasing power across decades. Those priorities are no longer aligned. Next, Andy Schectman unravels why today's monetary policies still reflect decisions made during that extraordinary period.
I think it's massive, and unfortunately, probably don't have enough time to jump deep into that right now, but I like your perspective on things, and it is the forest that matters, not the individual trees in and of themselves. Let's change direction just a little bit, and you know, they say actions speak louder than words, and I believe that. So if I were looking over your shoulder this afternoon, where would I see you putting your capital to work, and what gives you the confidence in this scary time to do it? And is there anything you are intentionally avoiding in this market?
Yeah, so what I'm buying, and again, the advantage is time horizon, right? So, you know, it's funny, like, I like to have counter arguments against gold bugs. I am a gold bug, but I like to challenge the thesis. And I feel like a lot of people are shorter term than they like to say. I'm really long term. I like to buy things that with the intention that I will never have to sell, unless it's like a speculative junior miner. But when it comes to what I'm buying lately, it's been physical silver and a company called, I'm sure many have heard of it, Pan American Silver. So why do I like silver? I mean, I don't need to explain the bull case to you, but just on a high level, 70 to 80% of silver mine comes as a byproduct from mines that are primarily focused on things like copper, lead, zinc.
Most investors spend more time predicting next month's price than evaluating the next decade's supply constraints. Andy Schectman notes that silver's production depends largely on other metals, limiting how quickly new supply can respond even if prices rise sharply. The structural reality receives far less attention than daily volatility, yet it shapes long-term investment outcomes. Patient capital often benefits while reactive capital chases headlines. Next, Andy Schectman reveals why industrial demand could tighten this market faster than many expect.
So what does that mean? That means that a rising silver price doesn't dictate whether more production can come online because you have it as a byproduct. So there's supply. Bringing new supply online is a huge challenge. The applications for silver continue to grow. You know better than anybody, Andy, but you know, we've reduced the amount of silver that we use in solar panels over the last 20 years. We use 1/10 the silver we used in solar panels 20 years ago, and yet demand keeps increasing because solar panels are more widespread. But that's kind of a common story. There's medical, there's military, there's applications in data centers, AI servers, and so forth. But there's also the fact that silver is used in bleeding edge technology. And I'll give you one example. This is what I like about it. This is why I have a long-term view on silver. So silver's been used in EV batteries for forever, right? 20 years, whatever it is. But if you look at what Samsung's doing now with their new solid state battery, it's super interesting. It's expected to use 20 times the amount of silver that current EV batteries use. It's expected to be commercialized in 2027. It has a 600-mile range, takes 9 minutes to charge up to 80%, and has a 20-year life. It's first going to come out as a premium battery for premium EVs, but if this goes mainstream, that's another application for silver that could probably consume 5 to 10% of silver's annual output, annual production.
Technology keeps reducing silver per device, yet total consumption continues climbing because adoption is accelerating even faster. According to Andy Schectman, emerging applications such as advanced batteries could create entirely new layers of industrial demand without equivalent supply growth. Markets often underestimate compounding demand until shortages become impossible to ignore. By then, institutional positioning is usually well established. Next, Andy Schectman exposes the overlooked demand trend that could reshape silver pricing for years.
So that's just one example, but I wanted to give the kind of the thesis as to why I love silver. And that's why I've been buying physical silver. I don't think it's necessarily cheap historically, but I do think $45-50 is the bottom. I think the upside over the next 10 years, and again, I have a long time horizon, it's probably $300-400 an ounce. And I don't view silver as a precious metal. I view it as an industrial metal. And that's why I'm bullish. And that's why I've been focusing lately, the last few weeks, on silver.
It's interesting you say that. First of all, Pan American is my largest holding. I love the stock.
Yes.
Why don't you think it's a precious metal? I mean, unpack that a little bit, because it has a very long history of being one, and it is an industrial metal, and an industrial metal that is increasing in its uses, a plurality of uses, which is unusual for a commodity to begin with. But you know, it's critical mineral. I guess, is it just because it's been stripped out of money? Is that why you think it's more industrial than if at all monetary these days?
Yeah, so it's a bit ideological, but the reason I say that, well, fundamentally is I think 70% of all silver now goes to an industrial application. I know the history of silver.
Silver may be treated like an industrial input today, yet investors still rush toward it whenever confidence in paper assets weakens. What Andy Schectman is highlighting is that the market increasingly values silver for two separate reasons that can reinforce each other during periods of stress. That dual identity makes simplistic valuation models increasingly unreliable for long-term investors. Next, Andy Schectman reveals the contradiction hidden inside silver's monetary history.
I mean, the definition of a bank in China is a silver business, right? So I know silver's long monetary history, but for me to wrap my head around what I think is the proper thesis for silver, which is similar to copper, is to view it as an industrial metal, because that's where the majority of it is used. And so that's why I say that. But yes, I understand the history as a precious metal.
You know, it's interesting. It's an interesting thought process, because on one hand, if you put silver at $200-300, your mind goes to, oh shit, what's going to happen to industry? Mm-hmm. What's going to happen to all these manufacturers? But you look at gold, and if I would have said to you 3-4 years ago, when gold is $1,000, gold goes to 5,500, is there going to be blood in the streets? Most people have said, hell yeah, it's going to be crazy, right? But it wasn't, right? And so at 7 or 8 or 9,000, does that mean life goes on? It kind of seems like it does, because of what you just said, because gold has virtually no industrial uses. It's just universally accepted as money, as as a monetary asset. So it's an interesting thought experiment, one where higher prices would certainly put it to the test.
Yeah.
I like your thoughts. So how does that play out for the average investor? What do you tell them?
Markets often assume higher commodity prices automatically destroy demand, yet history rarely follows that simple script. Andy Schectman's argument suggests silver's industrial role should be evaluated alongside gold's monetary function rather than in isolation. If financial conditions deteriorate, both demand profiles can strengthen for entirely different reasons at the same time. Investors ignoring that possibility may underestimate silver's long-term potential. Next, Andy Schectman reveals how that changes practical portfolio construction.
You tell them to buy things like Pan American silver, or do you tell them to buy physical metal if indeed it is primarily a monetary asset?
Yeah. So the way I view
I'm sorry, excuse me, a industrial asset. Pardon
industrial asset, yeah. So, the way I view investing in these critical metals, let's call them, that I believe belong in a portfolio, which is copper, silver, and gold. The nuances of how we define it are one thing, but how I would play the silver market is the same way how I would play the gold market, which is like a Christmas tree. So the trunk, and it's based on size, it's just a good analogy. Your trunk is your physical metal. The bottom of the tree, which is usually the widest part, is your producers. And as you go up to the top of the tree, and as it gets thinner and thinner, that represents the developers and the explorers. So, and there are obviously, more risk involved as you go up the tree, but the base is the metal. More money for me personally belongs in producers. I like the leverage, which is the bottom of the tree. And then I dabble in a few developers and some explorers as well.
Many investors chase the highest return mining stocks before securing the asset those companies actually produce. This is where Andy Schectman's thesis shifts toward disciplined portfolio construction, emphasizing physical ownership first before adding producers and carefully selected exploration exposure. Layering risk, instead of concentrating it, creates resilience during unpredictable monetary cycles. That approach prioritizes staying invested over chasing maximum returns,